Good afternoon, everybody, and welcome to the closing bell at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. We're going to wrap up all of the action today. And let's just say the bulls, well, I wouldn't say they're back, but on a lighter volume day like we saw today, they did bounce after what was a decent, impressive move for the last three sessions. We are now not only at month end, we're at quarter end, so you can always have some decent moves and some volatile moves, but we haven't seen it towards the last couple of days. It's been grinding. But taking a look at the Dow Jones, finished up 69 points today. That's good for about 0.3% to the upside of 20,728.50. Challenged by its 20-day moving average. Needs to break through there if the short-term bulls. You've heard me say this. I sound like a broken record, but this is the range. And as a matter of fact, if I look at it, I have 1, 2, 3 right now defenses at the industrials 20-day moving average. That means that the short-term bulls, they might be running out of a little bit of steam right now. They're going to need a catalyst. We don't have much on the earnings behalf. We've had some decent results on some economic data. Again, claims a little bit higher than expected, but well below the historic norms today. You continue to see some of the housing data. It's positive. You're seeing, just GDP revisions to the upside. So the market's getting some signs that growth is there, that we're at a place where, people aren't feeling there's an inflection point for getting negative, but there isn't another catalyst to get us to that next level, so to speak. I think we're going to have some trouble getting through there for the remainder of the week, so we'll keep an eye on that level, that 20-day moving average. Now, the S&P 500, the SPX cash finished up $6.90. That's good for almost 0.3%, 0.29% at 2368.10. I like the action in the S&Ps. Really what's the driver there is going to be the financials and the energies, as well as the tech sector. That's helping out the S&Ps. They held higher highs, higher lows, broke through, settled above the 20-day, both yesterday and today. But again, not a ton of volume. I'm not seeing some conviction here. I'm just seeing some passive grinding moves to the upside, which is represented in the volatility index that we'll get to in a minute. Now, taking a look at the Nasdaq has been the shining light in all of this market. You had large cap tech, you're starting to get semiconductors, as well as the biotech sectors, which also helps the healthcare component, but that's helping the tech sector, which has bounced off its 20-day moving average, but is now starting to grind. Again, these ranges are getting smaller. There's some consolidation up here, and while yes, we are getting higher highs and higher lows, we're not getting them with the conviction of volume. That is why I am not looking at this saying, well, yes, it challenged, bounced off. I'm not seeing, yes, we are seeing new levels that we haven't seen in 2017, but we keep hitting these tops, and that's what I'm looking at right here. This could be in the Nasdaq, what we would call in the tech business a double top, right? This settlement here and this test here at 54.39, we need a break there, and we need a break with some volume. We'll have to wait and see if that occurs, but right now it hasn't. Now, the Russell 2000, impressive move back to the upside. The last 4 sessions, it's now taken back its 50 and its 20-day moving average. We want to see some conviction here. What do I mean by conviction? You want to see it take back that 1400 level, and you want to see it take it back with some volume. That would be some conviction both for the short-term and intermediate-term bulls. I, again, am going to be looking at this with a grain of salt. I'm still not completely convinced that there is a catalyst right now out in the forefront because, yes, revised GDP is a positive, but it's not revised to a level where I would say unless these infrastructure plays, tax reform and healthcare reform get through by the Trump administration, and a lot of this is retro to 2017, that they're going to see much of a catalyst, especially on the domestic side, which is what the Russell 2000 represents. Volatility crumbled. You can see that off of the highs of a little over 15 a few days ago, it's now trading at 11.5. Now, it did bounce up 1%, up 10 cents at 11.50. But again, it's at its historic lows, and it's sitting on these bottoms. That's just telling you, folks, there's not a heightened expectation of big violent moves at this juncture going into the end of the week. But like I said, this is not only the end of the month. The 31st is tomorrow in March, last trading day, but it's also the last day of the quarter. So you could see some window dressing, or you could see some profit taking. We'll have to wait and see. The dollar has firmed up extremely. This has been one heck of a move in the dollar. Off of its lows at a little bit below 99 just a few days ago, it is now retaken its 20-day moving average and looking to challenge its 50-day moving average right around $170. $100.70. 101 is going to be that critical resistance level that the market's going to want to see as far as dollar bulls. We'll have to wait and see on that one. With that being said, if we do continue to see dollar strength, you're going to see continued weakness in global currencies, potentially, as well as maybe some potential weakness in crude oil. Crude oil has made an impressive run to the upside. We had lower than expected builds in Cushing on the EIA report that came out. There was about 900,000 barrels that were reported as far as an increase in storage, which was basically almost half of what was expected. We also have been hearing headlines out of OPEC nations and non-OPEC producers. You've seen that the Brent contract is trading at 52.42. It's retaken its 20-day moving average with that close. Very interesting move there. The Kuwaiti oil minister did come out in a headline saying that, yes, they will adhere to production cuts even past the June expiration of the agreement that they all had put in place. We'll see if that continues, especially if crude and both West Texas and Brent continue to move to the upside. There's going to have to be some profit taking that's going to probably come at this point in juncture, because we still haven't seen huge draws or any economic data that's telling us that we have an inflationary environment, a growth environment that's really going to hit those supplies. Taking a look at the bonds got beat up. Bottom line is that you've seen that the bonds have stayed in a decent range, both on the 2-year, right here, the 10-year, right here, and the 30-year. What this is telling you right now is that that bump that we saw after the healthcare vote never came to fruition, and there was a little bit of uncertainty, that safety trade, that has pulled off considerably. Bond prices have come down significantly over the last day, and you've seen that yields have held up. That has been a huge benefit for finance. Now, finance was one of the leaders today and yesterday. We'll see if that continues, especially if we see any shift in the bond markets going into the close of business tomorrow. All right, folks, that is it for the closing bell. Join me tomorrow morning. I will be going over all the action that happens in Europe and Asia, and I will prime you after the open in the U.S. We're going to have plenty of ideas and perspective going into the last trading day of March. So we'll see you then here at MarketStream.live.